Well, Hindalco has reported in-line set of numbers for the December ended quarter. EBITDA is pretty much in line with what the street was estimating. And to take the discussion forward, we have the Managing Director, Mr. Satish Pai. Hello and welcome to Bloomberg Quint, sir. So I'm going to start off by asking you about the basic numbers. We've seen good amount of growth coming in from the aluminium division, coming in with Utkal included. I would like to understand a little bit about the cost matrix, the cost of production from this division going forward for Q4 as well as FY20. Given, are we looking at some amount of cost pressures building in now for the division?
So, as you said, I think the Q3 results on aluminium and copper were pretty good. We were more or less in line and in some cases slightly higher than analyst estimates. Now, the cost of production in Q3 was flat with Q2. So in spite of pressures on coal and furnace oil, we managed to keep our cost of production Q3 to Q2 flat. In Q4, our guidance that we are giving is that we'll probably be flat to slightly lower because we think that some of the cost pressures are actually easing. Okay. Because oil prices have come down, so carbon prices are starting to show a bit lower. My biggest worry still remains coal. If coal availability is good, then we think our cost of production actually can go down.
And how much do you estimate the quantum to be if we have more of coal available for the next quarter?
So if coal availability was abundant, let's say, and we could get enough rakes, then our cost of production could go down another 5%.
All right. I'd like to understand a little about the hedging level and the quantum that we have seen in this quarter.
Yeah.
And how much can we expect going forward in Q4, the ongoing one, along with the next year?
So Q3, Q4, more or less the same percentages. We are roughly about 38% hedged. And in Q3, actually, the hedges gave us a positive 100 crores because the LME dropped from November, December onwards.
Right.
So you will see the same quantum effect in Q4. In FY20, we are about 15% hedged.
All right. Okay, I'm going to be chatting a little bit about the Utkal Alumina division because that's a stellar performance coming in from that division. Almost the highest ever EBITDA that we've seen from this division. I'd like to understand what is leading to solid set of performance coming in from that division. And in isolation, do you see that performance continuing going forward because we're seeing some amount of downtick coming in on the alumina prices right now?
Yeah, so for me, Utkal is the Utkal alumina is 100% provided to our smelter. So the most important point for me is that the production is stable, which it is at around 740 KT, 750, and the cost of production in Utkal. So the cost of production in Utkal is probably the lowest cost in the world right now at around $160. So we think that for us, we will be keeping the operations and the cost of productions at this level. So the price of alumina going up and down doesn't really matter to Hindalco at the end. It's the cost of production of alumina that is more important.
So EBITDA could be maintained going forward?
The EBITDA of the aluminium business will be maintained going forward.
All right, I'm going to be chatting a little bit about the copper division in that case because the sales volume seems to have declined year-on-year basis, even as the production volumes have been higher. I'd like to understand what can we, I do understand that there have been a recovery in sales volume sequentially.
Yeah.
But I'd like to understand what is the growth forward and what kind of EBITDA can we expect from this division?
So see, the copper division actually is quite steady. They roughly do about 100 KT every quarter. This quarter, we actually produced 105 KT when we sold 99.
Right.
And even on to the call we have been explaining, so some amount of sales at the end of the month doesn't get booked. Right. That's one reason. You know, a few KT sometimes if you don't ship it out in time, it will not get booked this quarter, it will get booked in January. And the second thing is the smelter 1, we are having a small shutdown. So we wanted to keep some cathodes for the rod manufacture.
Okay.
So you will just see the 3 or 4 KT that should have been sold in Q3 showing up in Q4. So no real story there. I mean, generally we are selling about 100 KT a quarter.
All right. I'd like to understand how sustainable are the margins currently at 16% that we've seen for Q3. What can you expect? What can we expect for Q4 and for FY20 as a whole?
So margins, you have to split it up between copper and aluminium. The copper margins Q3 to Q4, actually Q4 performance will hopefully be slightly better, because as we said, we only sold 99 KT, whereas we should sell north of 105 KT in Q4. So copper margins should be better. On the aluminium side, the LME is now about $100 less than Q3. So the margins in the aluminium business in Q4 will be lower than Q3 because the realizations will be $100 less.
All right.
Now, what will happen in FY20 is a view on what the LME of aluminium will be in FY20. And I think that we will have to see how the US-China trade war that is going on gets resolved. Because if in the next month, as talks are going on, that gets resolved, then the Chinese economy with their government stimulus will then start to show strong economic growth again. Because people today are really worried whether Chinese demand is slowing down.
Right.
And that is what's keeping commodity prices depressed. So the next month, month and a half is going to be very critical to see how that trade issue gets resolved. Because if it does get resolved, we think that all commodity prices, including aluminium, can go up.
All right, we're going to get on to the prices in a little bit, but before that, I'm going to be chatting a little bit about your deleveraging efforts.
Yes.
For FY20 specifically, standalone plus Utkal division, we saw the net debt to EBITDA ratio coming down or improving significantly. I'd like to understand what is the estimate that we have for FY20, and also if you could give us an individual breakup for the net debt that you expect going forward for your Utkal division and on standalone basis.
Yeah, I think Utkal, well, the combined Hindalco Utkal long-term debt is now around 18,000 crores.
Right.
Our net debt to EBITDA at the Hindalco Utkal level is now about 2.36 net
Right.
debt to EBITDA.
Right.
Now, in Q3, we prepaid about 1,575 crores.
Right.
Q4, I don't think we have any plans to repay anything. But next year, depending on the cash generated, we plan if after CapEx, any remaining cash, we will use it to continue to pay down the loans. Because our target is, we are very comfortable at 2.36 net debt to EBITDA, but it's a commodity business. So the lower you can bring your debt levels down, the more comfortable it is.
All right, sir. So I'd like to chat a little bit about, as a whole, the industry as a whole, what kind of import duty suggestions or propositions are there on the table right now on scraps in the face of US-China trade war tensions that you've been speaking about?
So the import is probably the biggest concern we have, because year to date imports have gone up by 21%, and we see quite a lot of imports coming in China. The import duties are one aspect. The anti-dumping is something that the industry, the Aluminium Association, is also filing for. We are also asking for non-tariff barriers on the scrap. So it's not just a question of raising duties, because we have signed free trade agreements.
Right.
So the duties don't apply to countries that you have an FTA with.
Right.
So I think that just like the US government, you have to use a variety of measures.
Right.
You have to use duties, you have to use anti-dumping measures, you have to use non-tariff barriers like
Sure.
standards.
Sure.
So we are talking with the relevant authorities on a number of these initiatives.
So any particular hike that the industry as a whole is pitching in for, if you could just give a ballpark understanding for the viewers so that...
I see. So look, on the duty side, what we are saying is that on the primary and the scrap, keep the duty 2.5% higher.
All right.
And actually on the secondary, we are saying increase it by 5%.
Okay.
So that the MSMEs and the SMEs get some more benefit.
Okay.
So we are actually asking for the downstream side, the duties to be raised by 5%. So from the current 7.5%, it will go to 12.5%. Whereas on the primary side, we are just asking for a 2.5%, which is 7.5% to 10%.
All right, sir. So I'd like to understand a little ballpark figure that we could work with for aluminium and alumina for FY20 and also for the Q4. Also, I'm going to play a little devil's advocate here by asking you that aluminium price is roughly around $1,800 per ton right now.
1850, yeah.
Around that level. With a number of headwinds now coming into play, like auto demand not picking up, we have commentary coming in. Why do you think the aluminium prices would not be slipping back to the level of around $1,400 or $1,500 per ton, somewhere that we saw in calendar year 2015?
Yeah, so it's a fair question. So let me first answer what will give a floor to the aluminium price. We can talk about the upside later. 50% of the Chinese aluminium capacity today, CRU has said, is losing money, maybe more, because their input prices have gone up, their environmental regulations have gone up. So we think that the market at 1800, 1850 is actually testing the lower levels of the pricing. So we don't think there is much room for it to go lower than that. The question really is how much higher can it go? And as I said earlier, it all depends on the Chinese economy health, because China is 50% of the demand and 50% of the production.
Right.
So if the Chinese demand has, in the last quarters, has showed some signs of softening. And that is because the sentiment is very weak because of the US-China trade war.
Right.
If that trade war gets sorted out, then the LME will jump up. If it does not get sorted out, then we will continue at these 1800, 1850s.
So what's the upside that you're looking at in that
The
case?
upside can be anywhere up to, we have to give a range.
Yes.
For us, the conservative case is 1800 to 2000, where
Right.
we are today. And the upside case for next year is 2000 to 2200. And if you read most analyst reports like CRU and all, they're predicting that the second half of next year, you should be seeing the 2200 range.
And how about the alumina in that case?
So alumina prices are of not much interest to Hindalco because we don't sell any alumina to the market. But the alumina prices are actually being held up because of what's happening with Alunorte.
Right.
And Alunorte is supposed to come back in production mid of this year,
Right.
calendar year.
Right.
In which case alumina will go back to the 330 to 350 range.
All right. In that case, I just have a last question.
Yeah.
Your group entity, Vodafone Idea, is actually looking to raise around the 25,000 odd crore, and the company has a minuscule stake of around 2.5%.
2.6%. Yeah.
I'd like to understand, would the company continue to maintain the stake in the company, or is there something
Yeah, I
else in the
think
offing?
that, this is a 25-year-old investment that we have in Vodafone Idea. And just so that we are very clear, we used to have a much higher percentage that over the years has now come down to 2.6. So at this current levels, we think we will maintain it because we see an upside. So that's why we intend to maintain the 2.6% in Vodafone Idea.
All right, Mr. Pai, this is all that we have for you.
Thank you very
so
much.
much for your time.
Yeah,
Pleasure
thank you.
speaking to you.